if the pace of the easing bias does remain data dependent, then how did Friday's PCE index, in your opinion, Komal, change the narrative?
Sri, you brought forth a very important point. You said if it is data dependent, speaking about the Fed. And I have maintained in my writings that the Fed, despite saying that it is data dependent, is actually has become a data independent entity. They are determined to cut interest rates, and they are going to do this come what may. Yes, the Friday PCE, some of the inflation numbers were positive, but keep in mind that the core inflation rate year on year actually accelerated from July to August, number one. Second, a good part of the increase in the index is coming from rent, and rent is not going to slow down anytime soon, and it has a big weightage in the total basket, and that is a second reason to worry. And then you have been speaking about the external risks to the United States, the price of oil, and anything that pushes up the price of oil is going to push up inflation. So I think the Fed has been hasty, and I would not refer to them as being data dependent.
That's a very interesting perspective. That being said, Komal, the markets seem to be wrestling with this idea of soft landing, immaculate disinflation, and the risk of recession. And allied to that, material deterioration in the labour market. The markets got spooked in August, set off that volatility event when they saw 4.3% unemployment in the payrolls number. Is there a risk that we see similar, if not worse, deterioration in the labour market?
Second, again, the labor market, the market produced about 114,000 jobs, which is nothing to sneeze at, Sri, in terms of what it has been in the past. The Fed wants the labor market to soften, the economy to come down with a soft landing. If that's what they really want, they are getting it. So my point is they should not have cut interest rates at all on September 18th because they were getting what they wanted without any change in the interest rates. At the same time, the inflation is remaining above target. And we have seen from past history that when you're this close to the bottom, this close to the target, that's when it gets hardest to go down further. So you don't get the signal from inflation and you don't get the signal from jobs requiring you to cut interest rates as the Fed did 10 days ago.